All right, let's dive in. Today, we're going to crack open one of the most mysterious, most powerful forces in all of modern finance, quantitative trading. It's this wild world of super complex math, computers that move at the speed of light, and some of the most brilliant minds on the planet all trying to outsmart the market. So let's pull back that curtain and decode what's really going on inside. So what on earth does a quote about bullfighters have to do with trading stocks, right? Well, this line is from the introduction to a real research paper listing over 100 trading formulas. And you know what? It just perfectly captures the high-stakes, high-pressure world of a quant. See, it's not about playing it safe or seeking happiness. It's about staring down this incredibly complex, dangerous beast and mastering it. At its absolute core, quantitative trading, or just quant trading, is about taking the most unpredictable, most chaotic variable out of the entire equation, us, human beings. It's about replacing gut feelings, intuition, and emotion with pure, cold, hard math. It uses algorithms to spot profitable patterns that a human trader, no matter how smart, could never, ever see on their own. For decades, people have talked about quant trading like it's this black box, some secret, impenetrable system that only a handful of geniuses can understand. But here's the thing, it's not some kind of dark magic, it's a method. And today, we're going to break that method down piece by piece so you can see how it all works. The whole philosophy here is to completely ignore the story. A quant doesn't care if a company has a visionary CEO or a brand that everyone loves. They couldn't care less. All they care about is the price, the volume, and literally thousands of other data points that can be crunched into numbers. It's a totally, purely objective way of looking at the market. So how do they actually turn all that data into a strategy that makes money? Well, it all starts with the hunt for something they call an alpha. And this alpha, well, it's the secret sauce of the entire operation. The easiest way to think of an alpha is like a recipe for profit. It's a very specific, testable idea about how the market is going to behave. And get this, a single firm might have thousands or even millions of these little alphas running all at once, each one constantly searching for its own tiny, unique edge. Okay, now this is where it gets really interesting, because you can basically split all these alphas into two big philosophical camps. On one side, you've got mean reversion. That's the whole what goes up must come down idea. Then you have the complete opposite, momentum, which is all about riding the wave. If something's going up, you bet it keeps going up. And really, most alphas out there are just some kind of complex variation or a mix of these two fundamental ideas. This looks super intimidating, right? I mean, it's a real alpha straight from that research paper. But when you actually translate it from math speak into English, it's just a simple logical rule. It just says, hey, if the trading volume went up yesterday, let's bet that the price will drop today. And that right there, that's the whole game. It's about finding a pattern and then writing a simple rule in code to exploit it. Okay, so you've got this clever rule, but does it actually work? I mean, a brilliant idea is totally worthless if it doesn't actually make money in the real world. So how do you test it without losing your shirt? Well, that brings us to the next absolutely critical step. It's all done through something called backtesting. And honestly, the best way to think about it is like a flight simulator for a trading idea. Quants take their alpha, their little rule, and they run it against years and years of historical market data just to see how it would have done. This lets them crash and burn 1,000 times in the simulator without risking a single real dollar. And this is what that looks like in practice. Now, hey, don't worry about trying to read every single line of code here. That's not the point. What's important is the idea. This little script automates a classic strategy called the moving average crossover. It's just telling the computer, hey, when the short-term average price crosses above the long-term average, buy. It's a perfect, simple example of turning a theory into code that a computer can run. So after you run that simulation, you get this, think of it like a report card for your idea. And you see the good news right away, a 718% return. That's awesome. It even beat just buying the stock and holding on to it. But, and this is a huge but, you also see the painful side. Look at that max drawdown. At one point, this strategy would have lost almost 33% of its value. So, backtesting doesn't just show you the potential, it forces you to look at the pain too. All right, so once a strategy is tested and it looks promising, the whole game changes. It's no longer just about being smart, it's about being fast. And I mean, unbelievably, mind-bogglingly fast. Yeah, we're not talking about seconds, we're not even talking about milliseconds. The real edge in modern trading, where the big money is made or lost,
is measured in microseconds. That's millions of a second. Just to put that in perspective, it takes you about 300,000 microseconds just to blink your eye. That tiny, tiny window, that's the whole battlefield.
So how on earth do you win a race that's measured in millionths of a second? Well, you basically have to bend physics to your will. Firms build huge microwave towers to send data in a straight line through the air because signals actually travel faster through air than through a glass fiber optic cable. They pay a fortune for colocation, which literally means putting their computers in the exact same room as the stock exchange's servers just to cut down the travel time by a few feet. It is a full-blown physical arms race for speed.
So we've talked about all this crazy math and these incredible machines, but who are the actual people behind all of this? I mean, what kind of person becomes a quant? Yeah, the path to becoming a quant is, well, it's no walk in the park. It always starts with a super technical foundation, usually in something like math, engineering, or computer science. But that's just the ticket to get in the door. The real trick is fusing those hard skills with a very, very specific kind of mindset, a trader's temperament that's built to handle insane pressure and constant risk.
And this, right here, this really nails the two sides of the quant coin. On one side, you've got the hard sciences, the advanced math, the stats, the heavy-duty programming. But on the other side, you have these crucial psychological traits. And that last one, that might just be the most important of all, being comfortable with failure. Because no matter how good your models are, they will be wrong. And a great quant has the discipline to accept that, learn from it, and move on to the next idea without getting emotional.
And all of this, it brings us right to the bleeding edge of the future. For decades, quants have been building these incredible tools to automate trading. But now, those tools are getting so intelligent that they can start searching for new alphas all on their own. And that leaves us with a really fascinating and maybe even a little scary question. Are the humans who built this black box about to be replaced by it? That right there is the billion-dollar question. Thanks for watching.